Markets take a dramatic U-turn in the second half of trade, wiping off all the morning's gains. The Nifty sinks to 8,630. The Sensex loses 150 points. The rupee, though, strengthens marginally against the dollar.
The Fed's dovish commentary comforts global markets. Most Asian benchmark indices, barring Japan's Nikkei, end with gains. FTSE, DAX and CAC in Europe start the day in the green. That rally fizzles out.
We believe that everybody will have to chip in if there is going to be a fair and just and equitable resolution.
With its back against the wall, Financial Technology submits a proposal to the government to settle with NSEL investors. FTIL commits to contributing a total of 500 crore rupees, asks brokers to do the same to end the NSEL mess. Government sources say they will not be drawn into the settlement talks proposed by FTIL. MCA's petition before the CLB seeking the removal of the FTIL board adjourned will now be taken up on the 17th of April.
The deadlock continues in the Rajya Sabha over the coal and the MNDR bills. Members question how the centre can take up the mining bill as law when mining is a state subject. CPM meanwhile moves a motion to send the select panel's mining report back to the panel for more changes.
In a bid to make India a global financial hub, the Modi government plans to notify rules for international financial centres by the 1st of April. The first such hub could come up in the GIFT City in Gandhinagar in Gujarat.
A big blow for SpiceJet. The Delhi High Court directs the DGCA to deregister 6 planes of the airline. 2 Irish lessors had moved court seeking deregistration of planes alleging non-payment of dues.
The government decides to shut down 7 more terminally ill public sector units, including HMT watches. These PSUs have incurred a total loss of about 3,140 crore rupees over a period of time.
Meru Cabs on an expansion drive is looking to raise $100 million in fresh funds next month and is scouting the market for acquisitions. The company also expects a 50% jump in revenues this year.
Property rates in Mumbai set to go up further. Developers decide to pass on the hike in premium FSI charges on new projects to consumers.
Shot. Oh, there is nobody there. She comes up for Suresh Raina, potentially game-changing. Sure, is that under for Rohit Sharma? Rohit Sharma, that's something that he was very, very proud of, and he should be as well. Yeah, this is something we've seen in 2007. There was no answer to the ball carried to Darney. Oh, this is complete misunderstanding. The draw has to be good. It's a good one.
Running. That's in the air.
This could be dangerous. Shikhar Dhawan is getting under his second attempt. Oh, I think he's done all right. There was it
up. Once again on the back foot and a good catch by the Indian captain.
Oh, it's gone straight up. Dhoni is keeping the glare of the light away from his face.
It's a nice shot, but it's gone low. Oh, the second attempt. The catch is taken. And India join South Africa in the semi-finals. 100 wins.
Another day, another win. The men in blue emerged triumphant and in style. Thrashed Bangladesh by 109 runs. 7 back-to-back wins this World Cup. 11 World Cup wins on the trot. It certainly doesn't get any better than this. But then again, when did we ever have any doubt about them? You certainly didn't, Nandara.
But I'm sorry to say this, but we made the Bangla Tigers look like lambs today. But that is how well we actually played. Now we get set for the semi-final, where we're going to play either Pakistan or Australia. And I never thought I'd say this, but the way the Pakistan is bowling right now, I hope we face Australia.
All right, I hope we face Australia because Pakistan looks like it's a stronger team, at least at this point in time. Well, actually, that is going to be something that we will talk about in some time. It is a day to cheer Team India, but the same cannot be said about the markets, which are firmly in a volatile, vicious volatile grip. The market did start the day on a stable note on the back of positive cues from the Federal Reserve, but then we saw a dramatic U-turn in late trade, saw the indices give up their gains. The Sensex lost about 150 points. points and shut shop at 28,469. Look at the drop that we saw coming in towards the end of trade. A similar story playing out for the Nifty. The index closing below 8,650. The mid-cap index, which was outperforming intraday, also took a hit, closing about 0.5% lower. Anuj joins us now to wrap up the details of the day's trading action. Anuj, the markets taking a hit in late trade yet again.
Clearly, the market today, yet again, it was a disappointing session for the bulls, and the reason was that again in the morning everything looked good for the market. You know, the Fed event was out with a positive outcome. US markets were positive, Asian markets were looking good, SGX Nifty was indicating a good opening, and a good opening we had, but from there the market slipped. In fact, the Nifty lost 150 points and Bank Nifty lost 550 points from the morning highs. That was the kind of damage that the market had in the second half today. Let's talk about the stocks, and really it was all about banks again in today's trade. PNB, Bank of Baroda, Axis Bank, they were all down between 2.5% to 4%, and even the biggest ones in trade, ICICI, SBI, HDFC Bank, all of them losing anywhere between 3 to 4% from the morning highs. Apart from that, there were some other stocks that pulled down the Nifty. So stocks like Reliance, BPCL, HCL Tech, they were all lower in today's trade. On the gaining side, pharma is one sector which is still shining quite bright. Lupin was up about 2.5%, Asian Paints was up 2.5%, and GAIL was the surprise winner, up about 2%. On the mid-cap side, quite a bit of sell-off in the high-beta space. Stocks like Reliance Communications, HDIL, GMR Infra, all down between 4 to 5%. Not just that, if you take a look at the top traded stocks, there was quite a bit of red. Stocks like Adani Power, Indiabulls Real Estate, and Suzlon down 3 to 4%. And the most damaging part about today's trade has been that it's the third time that the market has started with a big positive gap up after positive news flow and has ended at low point of the day. This market clearly, for the near term, is in firm control of the bears, and the Bank Nifty is leading it lower.
Well, at least, Anuj, you're smiling because you're wearing that blue T-shirt and because the Indian team did well on the cricket pitch, but otherwise, a very, very volatile day for the markets. A quick check on Mint Street. The rupee ended the day March the high at 62.51. In fact, the Finance Minister made it a point to talk about the currency's strength in Parliament today, saying that it was coping against the US dollar much better than other currencies. Now, the US Federal Reserve has edged closer to its first rate hike since 2006. In its monetary policy statement released late last night, the Fed has dropped the word patient, a subtle indication that the era of zero interest rates is about to end. However, the Fed Chair Janet Yellen has also stressed that the removal of the word patient does not mean that the Fed is suddenly going to act impatiently. The statement ruled out a rate hike in April, and Yellen has said that the language change does not indicate that a June rate hike is coming. However, she said it could not be ruled out either. The Fed will continue to wait until there is further improvement in the labor market and confidence that inflation will move back to its 2% objective over the medium term. CNBC's Hampton Pearson gets us this comprehensive report.
Federal Reserve Chair Janet Yellen and fellow monetary policymakers appear ready to open the door to a rate increase later this year, but they also appear to be in no rush to do so.
Just because we remove the word patient from the statement doesn't mean we're going to be impatient.
The Fed chair ruled out a rate hike at the April meeting. Economic data tracking further improvement in the job market and higher inflation appear to be the most sensitive rate hike triggers, but the Fed chair acknowledged slower economic growth and more downward inflation pressure from the strong dollar makes a strong case for waiting.
Just as we don't want to be premature in tightening policy and aborting a recovery that we have worked long and hard to proceed as far as it has, we also don't want to be behind the curve in beginning to tighten given those lags.
Markets rallied based on the notion a rate increase may be further off than what many traders had assumed.
We could debate June or September, but it's this year. Remember, rates are zero. Our economy got to a zero Fed funds because we had an emergency. The emergency is long since passed. The Fed needs to get rates where they belong.
What we got was a small step towards what will eventually be the new normal for interest rates. But the exact timing for liftoff remains anybody's guess. Hampton Pearson, CNBC Business News, Washington.
And the removal of the word patient doesn't mean that the Fed is going to be impatient. Janet Yellen was had pointed that out. Let's see how Wall Street is reacting to all of that right now. The Dow and the S&P had been down marginally, while the Nasdaq was largely flat, and that is a trend that is very much continuing across the Atlantic. The European market started the day strong, but that rally has fizzled out. Let's bring up the frontline indices for you. The FTSE up by just 6 points, the German DAX down 68 points, the French CAC down by about 16 points. In Asia, most of the markets ended higher after the Fed's comments. The Japanese Nikkei hit by a stronger yen though, and that dropped 0.3% on the commodity markets. Now crude prices resumed their downward movement after a sharp rally that we saw just last night. So right now you have Brent at $54.58 a barrel, and NYMEX meanwhile at $43.98 a barrel.
Well, here's the latest in the financial technologies NSEL saga. Financial Technologies has put forward a proposal before the government in order to come together with a settlement for the aggrieved NSEL investors. In an exclusive interview with CNBC TV 18, Prashant Desai, the managing director and CEO of FTIL, says that the company is ready to offer an additional 320 crore rupees as part of that settlement that they are working at. Remember, they've already paid 180 crore rupees. This will take their total contribution to 500 crore rupees. But FTIL has also proposed that brokers need to contribute an equal amount, that means 500 crore rupees, for this matter to be settled amicably. But government sources have told CNBC TV 18 that FTIL is free to arrive at a settlement with brokers and NSEL investors, but the government will not play any role, any part in brokering in any fashion these settlement talks. They will not be a party to the settlement talks in any form or fashion. The judicial and the regulatory proceedings that are currently underway will continue. But let's hear out an excerpt of the conversation with Prashant Desai. And it's very clear that the settlement proposal is being put forward at this point in time because FTIL clearly has its back against the wall. Remember, the Ministry of Corporate Affairs is pushing for a plan to merge NSEL and FTIL, and of course the MCA has also moved the company law board seeking the ouster of the current FTIL board. Listen in.
We believe there is a better alternative, which is a resolution path. As FTIL, somebody who has to protect the interest of 63,000 minority shareholders, we believe the path to resolution is a path where we believe there is good for everyone. There is good for the so-called trading clients of NSEL who have to receive these payouts. It's good for the brokers. It's good for the government. It's good for the country per se. It's definitely good for the FTIL shareholders. So we've clearly proposed this to the government, considering the fact that all the concerned people over here will probably choose to look at a path of resolution. And in that, our basic construct has been to be fair, equitable, and just not just to FTIL and its shareholders, but to everybody concerned. That's the assumptions under which what we thought was right. We probably made this proposal. It's in line a very simple construct that we are putting. We believe that everybody will have to chip in if there is going to be a fair and just and equitable resolution. We are saying we are taking the lead. If you remember, about some time back, we had already put 180 crores to take care of close to about 50% payments to about 7,000 trading clients of NSEL. We are saying we'll come up and put another 320 crores, which takes our contribution to about 500 crores. Our view, and our very, very strong view, is that brokers are equally party to this, because you have to understand the privity of the contract of a trading client was with the broker. We had nothing to do with those trading clients. For 3 years, these trading clients used the brokers to probably trade on the platform of NSEL. We somewhere believe these brokers are also now getting caught into this. We believe if the broker also, with the resolution in mindset, pitches in with their 500 crores, we will have close to about 820 crores at the first instance. The first instance for all the trading clients who are supposed to receive payouts of less than 10 lakh rupees, every single person, 100% of them, which is close to about 7,000 trading clients, get 100% of their money back. For those trading clients who have to receive payouts between 10 lakh and a crore of rupees, they will get 50% of the money that is owed to them. Then the second leg of our proposal is, that's the contribution from us and from the brokers. We believe that all of us are in sync, Government of India, us, brokers, trading clients. Let us all put all efforts that we have at our disposal, and let's go ahead and recover this money from the defaulters.
You haven't approached the brokers in this. And secondly, the question of number of investors is now in question, because even NSEL is questioning the fact that of the 7,500 investors which are supposed to be paid out in the first, where you brought in 179 crores, they can only trace up to 3,500 investors. So how have you gone about approaching the brokers? Because brokers are not on board when earlier as well, when you were trying to come out with a settlement formula, which was being done on the behind when Mr. Jignesh was in the executive capacity, and now especially when the heat is on them.
So Sanjit, very fair point. Somebody had to take the first step. Currently what we saw is there is too much of negativity going around, right? Everybody is fighting with each other, attacks on us, attacks on brokers, etc. We decided somebody has to take a slightly first step with a resolution in mind. So we made that first step in all earnest. In the details of the proposals that I shared with you, we went to the government, we've proposed the thing. We now believe the ball is in government's court. We are sure at some point of time government will consider this, whether they consider exactly this, they have a modification to this. We are not privy to that. Government will get in touch with the brokers.
You envisage this settlement, you've decided to take the first step. You would hope that the brokers will also participate and chip in with another 500 crore rupees. But what has been the response from the brokers so far, and what gives you the confidence that the government will entertain this settlement proposal in any fashion?
So, yeah, good question, Shireen. Two things. Have we approached the brokers? The answer to that is clear no. As I said, somebody had to take the first step. We would believe that FTIL is the first person who has now decided to take the first step. Will the government consider this? Not up to me. It's up to the government. And as I said, the principal construct of this that everybody will have to have a resolution mindset. It is not something that I can achieve all on my own. So that's my first point. Second point, to answer Sajid's question in terms of the genuineness of the trading clients, etc. I'm saying that is a exercise which NSEL is doing on its own, Sajid. We don't want to interfere with that exercise. Our proposal has an underlying assumption. Our underlying assumption that all 13,000 probably are genuine.
Well, that's the Managing Director and CEO of FTIL saying that they have put forward a proposal to try and settle with brokers in order to deal with the NSEL investors' mess. But at this point in time, as I pointed out, our sources within the government say the government will not be party to any settlement and the government is not going to play any role whatsoever, is what our sources tell us at this point in time. Now, to compete with global financial hubs like Hong Kong, Dubai and Singapore, the Modi government is planning to notify rules for international financial centres by the 1st of April. The first such hub could be set up in the 74,000 crore rupee gift city in Gandhinagar, which was first conceived by Narendra Modi as the Gujarat Chief Minister. Here's a report.
On March 22nd, Finance Minister Arun Jaitley will discuss rules for governing international finance centres with SEBI and the RBI. Gujarat Finance Minister Saurabh Patel will meet Jaitley on the 23rd to try and pitch the case for India's first international financial services centre to be housed in Gandhinagar's gift city. Located about 8 kilometers from Gandhinagar, the gift city has been notified as a multi-service special economic zone with international financial service centre status. Government sources say international financial service centres may be exempt from FEMA regulations and may also enjoy special tax benefits. Regulators SEBI and RBI are being consulted on the kinds of exemptions that are needed to ensure the success of the IFC. Fiscal incentives include customs and excise duty waivers, exemptions from sales, service and purchase tax, among others. At the profit stage, units will be exempt 100% from income tax for the first 5 years, 50% for the next 5 years. Developers will have to pay no income tax for 10 years and MAT will be applicable on book profit. These are some of the proposals. The government is also working on putting in place strict safeguards to ensure there is no misuse. Sources say all transactions in the gift city will be in foreign currency and the use of the Indian rupee will be allowed only for basic admin work. Government sources also add any financial institution setting up in gift city will be considered a non-resident, and Jaitley along with regulators will decide on the quantum of upfront payment required, which could be set at $20 million. Nearly 260 of the 866 acres in the gift city is dedicated to an international multi-financial services SEZ and over 400 acres for domestic financial services. The first building built by L&T is ready. More than 15 corporates including banks like HDFC, Punjab and Sindh Bank, Corporation Bank, Syndicate Bank and a few IT companies have taken space. Besides that, the Narsi Monji school has decided to open an institute here. Realty developers like Niranjan Hiranandani and Bangalore-based Brigade have committed over 4,500 crore rupees for housing. If the government is serious about setting up IFCs, it will have to walk the talk with lower corporate taxes, exemptions from withholding tax and dividend distribution tax, and capital account convertibility. In New Delhi with Nenta Rai, this is Shireen Bhan.
Well, India's first international financial centre could come up in GIFT City in Gandhinagar in Gujarat. Now, it was a day of high drama in the Rajya Sabha. The House was scheduled to take up the coal and mining reports that had been sent by the select panel, but that was not to be. On the mining bill, several members of the House now raising questions about how the centre could take up the bill when mining was a state subject. The CPM, meanwhile, has moved a motion to send the select panel's mining report back to the select panel for more changes. The House has now been adjourned to 11 a.m. tomorrow. Ritu Panabhuyan, who's tracking the action, joins us now with the details. Ritu, what is going on? Does it look like the MMDR bill is going to go through, and what happens tomorrow?
Just before the MMDR bill was taken up, members started raising some legal points. The first point was that was raised was can the centre actually, go ahead and amend this particular legislation because mining is a state subject. Also, some members also wanted to know why is it that states were not asked for comments because mining is a state subject, and hence there should be more discussion on this. Last but not the least, and this is what hit the nail in the coffin. There was a motion that was moved by the CPM which said that the MMDR select panel report should be sent back to the select panel. Again, of course, Finance Minister Arun Jaitley tried to defend the government's position, saying that this is not possible because the MMDR bill and the coal bill, they both originated in the Lok Sabha. The deal that has now been worked out is that by tomorrow 2:30 in the afternoon, both these legislations will have to be passed. If that does not happen, Venkaiah Naidu told the House that the government will have no choice but to extend the session. Of course, he did not specify by how much this session will be extended, but yesterday the Parliamentary Committee on the Cabinet Committee on Parliamentary Affairs had decided to had taken a decision that if needed, the Parliament session could be extended by at least 2 days. With that, it's back to you.
All right, Ritu, let's see if we do see both the bills going through by 2:30 in the afternoon. It seems like we will have that extension coming into place. Now, the government today has promised to take measures to help farmers hit by the unseasonal rains. This even as members across party lines in the Rajya Sabha sought immediate financial assistance and loan waivers for farmers. The Finance Minister has told the House that the Agriculture Minister has constituted separate teams to assess the losses in each state and that the government would act with compassion.
कृषि विभाग ने हर राज्य के लिए अलग अलग टीम गठित कर दी है और आज से कृषि विभाग के जो तीनों मंत्री हैं वो स्वयं भी इन राज्यों के दौरे के ऊपर जा रहे हैं। और जैसा मैंने कहा, जो कई सुझाव माननीय शरद पवार जी ने भी दिए, किस प्रकार के कदम उठाए जा सकते हैं, अन्य सदस्यों ने भी दिए, इसमें बिना टेक्निकलिटीज में गए हुए एक हमदर्दी की भावना के साथ कि कितनी जल्दी से प्रभावित क्षेत्रों के किसानों की सहायता हो पाए और उनको रिलीफ पहुंच पाए, इस नजरिए से उन राज्य सरकारों के साथ तालमेल बिठाकर केंद्रीय सरकार और कृषि विभाग इसमें तुरंत कदम उठा रहा है।
Well, that's the Finance Minister, so some sort of a comprehensive relief package perhaps in the works. The government can now move on to the next step in the re-auction of coal blocks. The Delhi High Court has allowed the government to proceed with the allotment of coal blocks to successful bidders. The allotment to successful bidders will be subject to the court's final orders. Also, the court has ruled that creditors cannot claim dues from prior allottees before the final order is issued. Remember, GVK and JSPL had moved the Delhi High Court over the quantum of compensation that was allowed to prior allottees. Nanta, what about the spectrum auction?
Well, that's still underway, Shireen, and after 14 bids, the rounds of bids continue to hover around 1 lakh crore mark. Total bids stand at 1.09 lakh crores, and telcos are still slugging it out for airways across all bands. So let's see if that auction ends over the weekend.
Well, the government for now has decided to shut down 7 public sector companies that it has declared terminally ill. In a written reply in the Rajya Sabha, GM Siddheshwara, the Minister of State for Heavy Industries and Public Enterprises, has said that of 55 central public sector enterprises examined by the government, the revival or restructuring of 46 units was approved, while 9 were marked for closure. 2 of these have already been shut down. The 7 PSUs set down set to shut down their shutters include HMT Bearings, Tungbhadra Steel Products, Hindustan Photo Films Manufacturing and HMT Watches. Now, these 7 PSUs have incurred a total loss of about 3,100 crore rupees over a period of time. PSUs that have been approved for revival through joint venture or the disinvestment route include companies like Scooters India, Tyre Corporation of India, National Textiles Corporation and Hindustan Antibiotics. That, of course, is the reply of the Minister of State for Heavy Industries to Parliament. Some of those stocks will be in focus tomorrow. But for now, it's time for us to wrap up this edition of India Business Hour. Let's see if our markets can escape that vicious, volatile circle that they've been caught in for the last couple of trading sessions. And the action from Parliament. Will the coal and mining bills go through, or will we see an extension? All of that and more right here on CNBC TV 18. For now, goodbye. Thanks for watching.